Okay, welcome everybody. This is our second Futures Trading Strategies meetup of the year. We have both the Las Vegas day traders and the Las Vegas futures traders here. We're probably just going to go ahead and jump into this really quickly. There's just two things I want to cover. First thing is we do have a Discord group. So I'm going to send the invite out. Just give me one moment to copy it over, and I'll put it in the chat room. Invite and chat. So feel free to join. We can always talk in there and stay. It's easier for me to stay in contact with you on Discord rather than the messenger on Meetup, because I don't really log into Meetup too often. So that would be a good spot for us to all kind of communicate when we're not here. Second thing, Traders Expo 2022 was really good. I know, Joel, I saw you there. We hung out for probably 2 days, and there were some really great presentations and a lot of really good stuff that I learned, some groundbreaking stuff as far as like building wealth. I think, Joel, you were there. Building a trust, having someone set a trust up for you is a great way to avoid taxes. So, according to the guy who presented, you can set up a trust and actually trade out of your trust and trade tax-free. So if you want more information on that, just get in contact with me and I'll give you the information. It's not something that's simple. You're going to have to spend a few $1,000s to open the account and have the lawyers talk to the government and set it all up. And then there are, obviously annual maintenance fees. So, it's something that you need to have a little bit of money for. And obviously you're going to need to have any type of tax benefit. You're going to have to be dealing with lots of money anyway. So yeah, just send me a message if you're interested in that. I wanted to bring that up because that's really how the wealthy, build their wealth and, have it become generational, is setting up these trusts, avoiding taxes. And that's why I believe Warren Buffett said he pays less in taxes than his secretary. I think that's a famous quote or something. And then the final thing I want to mention before we get to the presentation, if anyone wants to share their future strategies or a part of their strategy, let me know, because if we don't have a volunteer for next month's meeting, I'm just gonna, do something myself. And then obviously if there are 2 or 3 people, maybe we can fit it all in one meeting. So again, contact me for that. With all that being said, we're gonna move up and get to the presentation. We have Wes here, and Wes, I don't know you too well. We had some really good contacts so far and some good chats. He sounds like a very knowledgeable trader and is going to present the way he reads the market and trades the futures market. So all I know is it involves volume profile and things like that. So let's just jump right in. I'll give the mic over to Wes, and feel free to share your screen whenever you want.
Hey, thanks for having me, guys. So welcome to Auction Market Theory 101, I guess.
There you go.
We're going to talk about, kind of synonymous, but there are some, nuances between, let's say, market profile and volume profile, though most people tend to use them together, and at least from my experience and the people I've talked to. And I'm just going to share my screen here and bring up S&P 500 futures, so the ES, which is my favorite product, my primary focus. So I should be familiar to most of the crowd here, I guess. Just let me know if you can see the screen there.
Looks good, if you can hear me.
Yep. All right, so I'm going to assume, no one here has ever seen or heard of this. So forgive me if some of this is, common knowledge to you or repetitive to any of your other studies with markets and TA and such. But I guess basically I'm just a regular guy like you. I'm still relatively new to this game. It's been about 3 years of pretty near full-time participation. Some of it on sim, some of it on micros, and basically, I'm not the guy yet at the level of making seven figures and living on a yacht. Though hopefully with hard work and dedication, I'll get there one day. But I've had some really good help along the way, some good mentorship, and I've been brought into this world sort of avoiding all the BS that's out there in general. And so at this point, I'm pretty confident in my analysis, and it's taken me, full-time dedication, not just reading, not just watching videos, but applying it in my day-to-day methodology, which is kind of from a day trading perspective, waking up, looking at the markets for a few hours, forming an analysis, leveraging some statistics, trying to take good trades, trying to avoid bad trades, losing money, making money, and documenting, you know, post-market analysis and trying to basically build my own understanding, my own interpretation, so that I don't have to listen to outside forces or interests, and just really stick to my own view. And when I say the word context, context is my starting point, whether I'm looking at anything, whether it's crude, Bitcoin, ES, NASDAQ, anything. Um, and so what's kind of beautiful about the profiles is they really apply to everything, and they're just kind of useful for a starting point. It's not the end all be all. It's not algorithmic. It's not a signal. I don't classify it as technical analysis per se. You could argue it is, but I don't think it falls into the same category as your traditional indicators, right? So thinking of things like RSI, MACD, Fibonacci, I don't look at any of those. I literally don't care. It doesn't matter to me. It might matter to you, and that's fine. And I have full respect for anyone who has the ability to form their own analysis, to put together a trade plan, to execute and make money consistently. So this is just my take on it. This is what works for me. And I hope, you know, maybe I'll spark your interest if you've never heard of this stuff before. But pretty much this is something that has been around for a long time. It's not a secret. Um, this runs decades old. And so I guess with that being said, let's just say this is a fresh perspective and, like I said, the starting point. So when you look at this chart, there's a few things going on here. And so if we talk about volume first, volume profiles, what I have on my chart is different volume profiles on the right-hand side. Okay. And so this screen here is my starting screen. I look at this exact screen before anything else every single morning. And if you notice there's light gray and dark gray, I'll take this profile for example. The light gray represents what we call value, the value area, which is 70% of where volume is traded. If you look at this little orange line, I'm not sure if this is too small to see, but
I can
this
see
is
it.
okay. This little line is considered what we call a Vpoc, volume point of control. And so for this profile, which is a weekly, this represents the place where let's call it the fairest price of the week, in the case of the S&P 500. Above this, the dark gray would be considered above value. So you could call this line the value area high, and likewise down here, the value area low. Now, what are these other profiles? These are monthly as well as yearly. And so going back to the foundation of context, on this one screen, I'm factoring in where is value on a yearly, a monthly, a weekly, as well as a daily profile when we break down each of these individual things. And so your daily, I should say this one here, because this is the overnight session that just started a couple hours ago, but this would be today's RTH. I have my market profiles, which are these letters. And let me maybe expand this a little just to make it easier to read. Oops. But these are associated volume profiles, daily profiles that go alongside. And so we can discuss the nuances there, but I just wanted to highlight when we talk about volume, this is how I'm looking at it.
I have a
And
question real quick.
yeah,
So when you have a yearly, a monthly, and a weekly, does that shift daily, or is it just from the beginning of the year, from the beginning of the specific month, and from that specific week, so like Monday?
they're all like rolling windows of time. So they're constantly changing.
So
I'd
it's
say,
exactly like if you're looking at that weekly, and let's say it's Thursday, that's going
mhm,
from this Thursday to last Thursday.
yeah,
It's not doing Monday and you're starting out fresh. Okay,
exactly.
gotcha.
It's yeah.
Cool.
And yeah, so what was the next topic? As far as like the tools that I use, right? So like I said, I don't use RSI, MACD, Fibos, or anything like that. Though I know a lot of people who use them successfully and love it. The main toolkit that I'm using is this stuff here, the market profile with the volume profile. And then I look at things like footprint charts, which I can give a quick little preview here. They have all different shapes, sizes, colors, and forms. But these things here with these numbers, I'll try and expand it so they're more visible. Here in the middle is 5-minute bar. Here on the left is 30-minute bars. And so why this kind of works well is the market profile, typically at least, the standard configuration is to set it up into 30-minute bars or 30-minute periods. And so when I look at what's going on inside the bar, right? So this could be a candlestick. Now I know what's going on, like how things traded, how much volume was bought or sold at each price. I can see things like the dark reds, which are pockets of aggressive market selling. So I can use these different pieces of information inside the bar. So this is kind of like you start with a higher time frame, as abstract as you can go, and then you kind of drill down into it if you need to. So I'm not watching these screens all day long, right? I generally look at this chart. I can do things like open up the profiles. I can actually combine them and merge them because, auctions aren't perfect. They don't necessarily start from 9 a.m. Eastern till, 5 p.m. Eastern. And so you can do things to kind of put these pieces of information together. But this right here is the standard format. And just one thing to note, this here represents the overnight session. And so I only keep the most recent, like 1 day's worth of overnight data. Every profile before this is just the RTH. So I'm really kind of ignoring most of the overnight sessions. Generally speaking, the volume's very low. What happens there is less relevant. It is possible to construct these profiles with like a 24-hour period. I've seen people kind of break it down into US, like the London session, the Asian session. So there's a whole bunch of different ways to configure it, but as it stands, I'm just looking at the US session. And so with this tool here, as I've split the profile, you can see the letters. They start with A's, B's, and C's. So the A is the first 30 minutes, right? The B's would be 9:30 to 10:30 Eastern. Forgive me for not using your local Vegas time. I'm near Toronto, so that's like I'm Eastern time. So yeah, every bar is a 30-minute bar, and you can put them back and get a whole different set of information. And we can get into a little bit more of that. I just want to mention that going back to this concept of drilling down, right, and using things like footprints at the bottom here, the main thing to look at is probably the delta. And so I'm going to use this term a few times throughout this talk here. In this case, we're not talking about delta like in the options world. I'm not really an options trader. In the futures world, this is not the variation, but the difference between how many market sells versus market buys. Okay. And so sometimes that can tell us things about the level of aggression, the momentum. And some of these colors basically are representing those numbers here in terms of the delta. And that's just something we can talk a little bit more, maybe in a future session, because you could go talking all day long just about footprints. I'm just trying to highlight like basically the main things that I'm looking at that are seemingly different from your traditional like TA. I like to look at numbers that are, objective. So I don't look at candlestick patterns at all. I've never studied them. I don't think I will ever study them. I like to know on either a relative basis, on a comparative basis, all these metrics that I can use because I can compare them to one another without any emotion, without any interpretation. Okay, and profiles and footprints, they're objective information. They're not a trading system. They don't tell you what to trade. And that's a key distinction is you're not looking for an overbought or an oversold or anything like that. You're just getting real numerical objective information about what's going on. And if you want to drill down one step further, I'm not sure if there's any scalpers in the house. I came into this game originally learning how to scalp. I'm just going to bring in my other chart here. And so if you've never seen this before, hopefully you have. This is a DOM, depth of market, price ladder, all the same thing fundamentally. I've added a couple things to mine that aren't necessarily as common to what most people use, but this is as far down as you can drill. This is watching price action at every tick for every price, every contract traded. So that's as deep as you can go. So you can combine all these things and go from higher time frame all the way down to the tick by tick action. I'm not really going to talk too much about the DOM, but I just kind of wanted to show you guys sort of where I'm coming from, the tools that I use, and we'll just specifically get into the profile stuff. Does anyone have any questions before I jump into the next part?
Well, Lincoln asks, how do you get a daily bias when price moves away from Vpoc? What would you expect to happen if that occurs?
Okay, that's a great question. And maybe for another session, statistical approaches that are, I would say, kind of like this quantitative discretionary blend, not in the traditional like quant finance perspective where you're looking at like way different things and more in the options world, market making and all that stuff is not really what I'm talking about. But when we look at metrics that we can use, we talk about value at the core of auction theory. It's always about value, not about price. So where is value? Well, I can tell you weekly value is between about 4,500 and 44.40, 44.38. And so today's price action was basically representative of a pullback to weekly VPOC and an immediate buying impulse, right? Essentially, where we expect the most amount of volume to trade, we went there to check for some trade to find buyers, and then we traded above. Now, when I look at tomorrow, I'm going to figure out where are we relative to the most recent reference of value, which would be daily. So I don't know if, can you guys see this? This like these two light green bars here or horizontal lines.
Yep.
Yes.
That's daily value for today's S&P 500 futures. Okay. I also have them like on the side here. You can set this up in different ways. Some people like to shade this and color it. Some people like to color their profiles so that they have different, colors when to represent value. I personally like the gradient because I can see how we traded through the day. Like basically I can paint this picture of this profile in my head just based on how the gradient is colored. I don't get lost in the letters. This is just a preference. All to say that right now we're trading above value on the daily and the weekly. So price is leading value. And we can have metrics about probabilities of, say, touching the previous overnight high, touching the previous overnight low, touching the previous day's high, touching the previous day's low, depending on if we open above value, in this case the daily, in value, or below value. And so we can use statistics to kind of structure our ideas. Does that mean we trade them blindly and not factor in things like a Russian war, things like oil going all over the place? No, that's where discretionary is kind of blended with these, quantitative statistical things. And so you can go down the rabbit hole with that. I hope that answers your question for now, but you can use value and price in different ways to kind of structure your ideas. Doesn't mean you're going to just trade them blindly though. You don't generate a system unless you want to try that. You could always do it and back test it. That's a whole other discussion. I'm just looking, where's the chat? That's your question, Lincoln? I know you said Vpoc. I used value mostly, but for example, I'll just mention one other thing. Auction starting this evening session, it is trending down. It's kind of, sellers are here for now. And that's what the deltas are showing, and that's what this is showing. If we look at Vpoc, I have this line here. It extends the Vpoc into the future. And we can use that as in the auction theory world or market profile world as what we call structure. So the word structure can mean different things depending on different people. In the case of high volume nodes versus low volume nodes, that could be structure. Structure could be like the highs and the lows. But looking at these orange lines here, you'd be surprised how many times price revisits those levels. And you can do the same on weekly, on monthly, and yearly. And I'll actually just bring that up. I just got to switch my charts here.
So you're saying that once the market advances away from value, it's almost like filling the gap, like coming back to revisit it. That's the expectation.
Yeah, volume acts as a magnet, right? And so if you think of the market as just a function to facilitate trade, like forget about speculation, forget about hedge funds. The purpose of the market, you just cannot forget that, right? It's there to facilitate trade. And fundamentally, that means the biggest dogs in the house, they're using us, at least as a day trader or a local, as some might call it, speculator, short-term trader, whatever. They're using us to execute large ideas, right? People might need to sell like 20,000 ES contracts and they'll do it, over 3 days or something, right? And they're going to try and get the best price. But if you're scalping for like 4 ticks or 4 points, you're not the one driving the market. You're not the one dictating direction. And so often where price trades most, where what we call the fairest price, right, which could be Vpoc. Sometimes Vpoc on a volume profile does not match on the market profile. The market profile is more time-based, so it's more where the most time was spent. So it's a little nuance. Quite often they're the same or relatively the same. In today's case, if I'll just flip back, they're actually very far from each other. You can see the market profile, the most time was spent down here, but volume point of control is at the high, okay, which that's a clue, right? The fact that these are not in line is quite revealing, and you get used to that as you kind of look at this day in and day out for years.
Can you what's the word for it? What's the difference between market profile, volume profile? What is the market profile showing?
The technical term is TPO, time price opportunity.
Oh, that's the TP. Okay.
So this represents the A period, for example, is just where price spent time during the first 30 minutes of the session. And the
Okay,
B,
so it's just weighted with the volume on, and that's the only difference.
yeah. So
Okay.
like this little profile beside it is the volume profile for the day. And it has a value area in light gray. So you can see like the value area on the volume profile is sort of higher, placement wise relative to these two green lines, which are the value area for the TPO market
Okay.
profile for the day.
Yeah.
And so like that's I'd say like intermediate to advanced to be kind of studying those differences. I generally just like to use mostly the market profile. The volume profiles that I use primarily are more the weekly, the monthly, and the yearly, just to kind of filter out noise. I just like to know if we're above a value area, like here on the weekly, right? And we've sold, we'll get into this here, like this is a selling tail or something you could call excess, right? You can see it held overnight. So like for the last like 2 days before today, like anytime we got outside weekly value, we basically sold, right? Today we closed pretty high relative to the open. We had a pretty steady one-way auction up. Volume was following price, and the higher we went, the more, volume we traded, which is part of auction theory's way to evaluate the quality or the strength or the how good of an auction it is. Like if higher volume is or higher prices are bringing in high volume, the auction's doing a good job, right? But if you're looking at earlier today and you're like, okay, it's auctioning higher, keep getting through the afternoon, just steady buying, steady buying. Like, where are you looking for taking your risk off, right? Like, where do you know they're sellers? Like, obviously, everyone's looking at this, whether it's a candlestick, a bar chart, anything. Like, you're gonna know, right? And so, yeah, we found some sellers at the same level where we would expect. We don't know. Like, there's no crystal ball. There's none of that. It's just if you're going to expect something, and then maybe zoom into the footprints and the DOM and the order flow to kind of see like how is our sellers coming in. Like you can kind of double check that and sort of drill into it. But am I going to watch the DOM all day long while all this is bouncing back and forth 100 million times? No. Sorry, I'm getting a little off track here, but it's I hope that answers the question. um, you can run really intricate and deep with some of these concepts. So I'm going to try and keep it as high level as possible. I'm just running through my bullet points here.
So
Oh yeah,
I have a question at the top there. Is that indicating a high amount of sellers? All that volume up there?
on the today's profile.
Yeah.
So we don't. I think you can distinguish between, like, you could color this like yellow or green if you
Mm-hmm.
wanted to, and sort of distinguish between market selling versus market buying. I don't go that far.
Okay.
But what I can do is jump to my footprint, right? And I can
Oh
go
yeah.
back to the end of the day, and I can look at these numbers, and I can literally tell you how many contracts traded at each price. Obviously, the numbers that are coming in the evening are different. So like, during the day there's a lot more volume. So you can see there's like thousands and thousands here, and then on the next bar there's like 84 and 68. So you kind of have to factor that in if you're looking at the overnight. But yeah, I can drill into it and see exactly like where we opened, where we closed, how many contracts traded, buyers pulling out, sellers coming in heavy. That's what this is telling me.
Okay.
If I flip back here, so yeah, 30-minute periods. Time is the focus of market profile. It's very similar to the volume profile, just not exactly the same. Some people argue volume profiles are more relevant. I'll just leave it up to you to kind of study both and use them together. I just got a question from Jonathan. Do you find market profile, point of control, or Vpoc more reliable in terms of drawing structure? So a concept called structural repair. I don't know if you guys know FT71, Futures Trader 71. I think he's one of the greatest value adds to learning about this. He posts every single day. He's got content going back like a decade. So if you kind of want to study the ES for like the last 10 years for free with, very similar approach, FT71, Futures Trader 71 has it. And so when he talks about structural repair, let's zoom out a little bit with these point of controls and VPOCs. Okay, it's going to get a little small here, but I'm going to try and condense it. These extended points of control, okay, price often comes back to check. And It really depends like what time frame you're trading. If you're like a swing trader, or if you're a position trader looking at things on multi-month, it's totally different. Um, but if you zoom out enough and like you can look at the treasuries, you can look at Bitcoin, this type of stuff for Bitcoin in the last year has like been incredible. Um, and a lot of people don't use market profile, and I think that's kind of an edge in and of itself. Like I think based on the people I talk to, like crypto traders are very different than guys like FT71 who have a more methodical and professional approach, even though it's still discretionary. And some people think that discretionary trading is completely useless, but if you're going to do it, I think the way that FT does it is kind of correct. But yeah, basically, if we were going to look for places to, like, if you're an investor, right, and you're like, hey, I make money every month, I'm going to try and invest in the SPY and just sort of monthly buy dollar cost average. Well, maybe in the middle of the month, like we start selling off and things in Russia get bad, and Biden says some dumb things or something, and Europe starts falling apart because military movements start, coming into other countries. Like when the world is freaking out watching price bounce around and you're trying to set up like limit orders, these orange lines, they are gold. I can say it for the S&P 500. I can say it for probably the treasuries. I don't really trade commodities. You might have some guys who use this for gold or crude. I'm not sure exactly. I know guys like Merritt Black are heavy into crude, and I think he uses a lot of this type of auction theory stuff for his like NADRO, which is more or less like, forming a context and doing this kind of stuff here. But yeah, these lines here, like you can really rely on them. And then you can see how they coincide with volume
No.
on different times, right? So like, look at this on the yearly. This is a high volume node sticking out, right? It's almost in line with this.
Good.
Same thing down here, right? So you can see like not correlation, but look, on the weekly, we traded a lot here. On the monthly, we traded a lot here. And on the yearly, we traded a lot here. This here is strong. Oh, sorry, I can hear someone in the
I
background.
just muted that.
Yeah. Is that clear for you guys? Does that make sense?
You said those are the volume point of controls?
These are the market profile point of
Oh,
controls.
okay. So just, okay.
Yeah, I don't extend the volume on the daily, at least. I don't point them out, and then I'm always keeping just the weekly. This is the monthly volume point of
So
control.
are those VPOC like virgin point of controls that you're only looking at, or just every point of control in the past?
I tend to pay attention more or less to these ones. Like
Like the
even
most
though,
recent open
yeah,
version line? Okay.
yeah, more of the open ones. Like yes, you could see that there is, like the day before yesterday's VPOC, and the day before it. Personally, that's just me. I'm not using them as much. I just really like value from the previous day, especially. Are we opening above it, in it, below it, and then using the stats according, looking at gaps, looking at excess, which is like the buying tails, selling tails, these thin points on the profile, which we call single prints. If you ever hear that term, an example of a single print, which we consider to be excess. So like there's a difference between this being a selling tail, this being a buying tail. But in the middle of the profile, that we would call a single print. And it represents kind of the same thing, but kind of different. And if you thought of it as like today, or sorry, not today, this day that this happened, there was just out of the gate, this is the open, right? The red letter. It's like we departed and never came back, right? You don't see like two letters ever coming back to these prices. So it's like buyers came in and bought the open, right? And they just held that, and it never had the chance to really make its way back. Like that's a strong buying tail. And then what happened? We balanced, we traded, right? We go back and forth. Balance is a huge concept. So balance, imbalance, I'll get into that in just a sec. And at some point, buyers kept pushing and pushing, but eventually they sent prices up into a point where sellers became what we call initiative, meaning like coming in heavy, coming in quick, market selling because price got high enough that they were interested in offloading their inventory. So price was never able to come back. So like this is like these were so good for those sellers that day that they just like went berserk and just offed inventory, and price never came back. We closed somewhere around here. That's a selling tail, that's a buying tail. But in the middle of the day, something like this, right? This Q, something like this. This is a slightly different thing. This is sort of like we balanced, we traded around here all day, and later on in the day, we actually left this trade area. We left the value area and we departed, and we left evidence of strong selling. If we had this type of formation above, there'd be evidence of strong buying. And so it's another detail for structure under the lens of market profile. And so we could use this as a reference for where, like if it was the day before yesterday, I forget how it traded overnight, but I'm pretty sure the overnight session before this morning, it basically didn't break a new low and it kind of traded down here. And then as we opened today, it just left. I'd have to double check, but that's what I remember when I did my prep. And so if yesterday at the end of the day, this is where sellers were, and then this morning, they're just not here. It's quite the opposite, right? We have a small buying tail. You know, structurally, that stuff is very important. It's not perfect, like it's not right to the tick. It still has a little nuance, but those are just things that I look at. So that's kind of fundamentals about the profile. Is you're looking for where do we make these bell curves, these distributions, where is the value, right? But also checking these little interesting things like where is the open, right? Where are these buying tails? Where are these selling tails? And where is that relative to value on a daily, on a weekly, on a monthly, and on a yearly? And so I know that's a lot to take in. But on this one screen, I get a lot of information, right? And so I think that's kind of powerful because if you are day trading, you got a lot of mental things happening. You have a lot of mental capital being spent. And if you can really be efficient and just understand like what levels you're interested in, where do you have structural buyers, where do you have structural sellers, if you're on a really short time frame, paying attention to things that are really noisy and busy like the DOM, like the footprints, only where it's relevant, you'll save mental capital. I know guys who are capable of looking at a DOM all day, every day. I personally can't do that. I mean, maybe if you're young, I'm 34, so, you know, I'm not old, but I'm not young, but I can't sit there, you know, like all day like a video game on super high alert, watching all the tick by tick numbers floating around. I can watch a DOM. I can see what's going on because I've spent enough time looking at it, but I only want to look at it when it's relevant, right? And I want to keep myself out of bad trades. So I'm only going to look at places where I have structural references that make sense. So we've covered openings, the tails, the Vpocs, value. The next, probably the biggest core concept is initial balance.
Before you go to the next topic,
yep.
do you mind if I ask you a couple of questions?
Absolutely. Go ahead.
I'm new to the volume profile and the point of control and all of these things. Where can I get this information? What brokerage do you use, and how much does it cost to do the trades on that platform? And you know, how do I get onto this system? The other thing is, how much time does it take to get to know the system altogether?
Yeah. First question is, are you by any chance in, like, do you work in IT with like hardcore advanced software at all?
No.
Okay. The platform I use is more developer friendly than it is like retail user friendly. This is Sierra Chart. They've been around for a long time. It is one of the best bang for your buck platforms in terms of performance, in terms of customizability. The downside is their support is garbage. There's no phone number. Their website is crap. It's basically a message board. They've just they cater to a specific type of individual. And so I come from a computer science background. I've worked in enterprise environments with very complicated software. And even with that experience, like it is a headache to get started in Sierra Chart, but there are a lot of tutorials. There's a lot of guys who cover it quite well on YouTube for free. And personally, when I look at when really, really crazy order flow comes in, like I was trading right in the middle of like March 2020 when things were going limit down and falling apart. Like my platform didn't skip a beat. And I had guys using Jigsaw, and I guys, Thinkorswim was crashing, Interactive Brokers was falling apart. Like, when those crazy things happen, when really bad things can happen to your account, like even being frozen for a minute when things are like in the, the climate of like March 2020, like, it's just, this thing performs. It's like having a Ferrari for the price of a BMW, but you got to know how to fix it. Like there's no mechanic who's going to help you. My platform with the data that I have is about, I think 85 USD per month, which comparatively speaking, because I haven't found any other place for that price that will give me this chart. This main chart is my life, like right here. The volume profiles with the market profiles. You can find sort of slight variations on other platforms where they might show you like one volume profile and their own version of the market profile, maybe some different color options, and maybe they use numbers instead of letters, but it all represent the same thing. So what is your platform that you use currently?
I use the Thinkorswim platform.
Okay, they might have something. I don't know if there's like extra add-ins that you can pay for. I know it's like NinjaTrader, like some of it's like there's like private add-ins or something that you can buy. I'm
As
not
far as I
familiar.
know, there is no add-ons.
I can
Okay.
I can vouch that there is market profile.
Okay.
I have a chart up that I look at on TOS.
Okay.
And you can do like monkey bars and things like that.
Yeah. So yeah, from what I've seen with other guys who use TOS, like it's way more user friendly. There's support, there's a phone number you can call. And that might be your best option. I really don't recommend most people use my platform. Um, Unless you're willing to really like bang your head against the wall for months and months, the payoff is well worth it. Like I have no intention of really using any other platform. If I do options, okay, a little different. But like just from a customizability, there's just stuff you can do in here. Like I haven't even tapped into, 20% of what's possible, and I've gone pretty deep compared to most of the guys that I've seen what they use. So, shameless plug for Sierra Chart. I think it's the best bang for your buck. It's just that you have to be willing to kind of like sacrifice, time and energy to get used to it. There are guys who sell some charts pre-made that might make your life simpler. And so I could recommend a guy by the name of Tessino Trader. I'll write that in the chat. I think he has a Patreon. I bought his charts for a couple bucks. I don't know if they're the same price anymore. But I had spent like a year just messing around myself and really understanding like configuring DOMs, configuring profiles. I'll just, for a like quick example here, I'll just show you with like this is a settings page for the market profile. And so every single one of these things can adjust something. And depending on how deep you've gone with your platform, like this could be a great thing or this could be like a nightmare. And all the subgraphs have their own settings, and subgraphs are like the lines. And then you can even go as far as to use they have like a version of C++. It's kind of like an abstract version of C++ code. And you can go in there and write your own code and compile it and build your own algorithms. The language is called Axel. I experimented with it for a computer science project. I didn't like it, even for me, as a software guy. Like it just wasn't that fun. It was a lot of work. But like you can go unpack things and really build it like literally from the code up. So it's powerful, but it's a double-edged sword. Don't really recommend this for everyone.
Who is your
Especially,
broker?
I use AMP, so AMP Futures.
Okay. Do they allow option trading?
I think they do. I've never tried. I've
Okay.
strictly done NASDAQ and S&P 500 futures with them.
I'm more of
They
an option trader. That's the reason I was asking. And I do some naked calls and puts. So that's one of the things that I need to
okay.
be on that platform or whatever. And do you save the workspace? And is it possible for you to share those workspaces?
So that's one thing I get asked all the time, and I really don't. And there's a good reason for it. Number one, to some degree, this is intellectual property that belongs to Mr. Tessino. I've sort of taken what he has and modified some of it. Some of it I've built myself. And the thing is, if you don't know how to actually build it and tweak it, you're just going to get stuck and you're not going to actually learn anything. And when it comes to learning how to build your own view of the market and build the things that you want to see, it's a very powerful thing when you're capable of doing that. And so I really like, I get asked all the time because I talk to all kinds of traders and a lot of them like this chart especially. And it's like, you can go pay for it, but even then, like the more important thing is like to know what it's doing and why do you have it colored the way you have it, why do you have those lines? What does it mean to you? Maybe you don't need the lines that I have. And so like if you pay for Sierra chart, I use what's called service package 11. You have to pay a little bit more than the basic like minimum entry level. I think it's like 30 or 40 bucks a month to get just market profiles. They are kind of a proprietary thing. It is an intellectual property at the like the guys who invented it level, beyond like the guy Tessino who just made certain charts. I don't know if it works that way with the other platforms like Toss, but at least through Sierra, like you don't have to get the platform with these market profiles. You could get pretty much everything else. So it's like an extra, I think 10 bucks a month, maybe 15, just to have the market profile. And I have like probably another 40 charts that don't have that. So just to get that, it's extra money.
Okay.
So yeah, it's like I said, it's really worth learning like how to configure it and how to build it yourself. Like it really is valuable to do that.
The other question is, do you just do day trades or do you do overnight and do you hold your position overnight?
I would love to get there. Currently, I do not. And as I sort of read some books, I am starting to get into the theory of options and more in line with like volatility. So I'm really trying to get in line with like guys like Ewan Sinclair, because I personally think there's something to this auction theory and combining that with volatility trading. And so I don't know where that's going to land me. I don't know what platform is going to enable me to really execute that type of stuff yet. But yeah,
I take it you don't do overnight trading.
if I'm trading in the overnight session, so I never hold from RTH to the overnight. Sometimes I'll trade in the overnight, but I'm usually scalping because it's actually a beautiful place to practice, even if you're on sim, because the auction is slow in general. Not like when bad things with Russia are happening, but it's kind of a nice way to do some drills. And so I'll trade like during the overnight, let's say, or maybe sometimes I'll trade from like 3 hours. I'll wake up a little earlier if something's happening at like 8 o'clock. There's like a CPI or something. I might scalp around just to kind of warm up at like 6 a.m. like Eastern time. But yeah, I'm not holding overnights. I'm not doing multi-day swings. I'm trying to sort of work my way into that and trade larger time frames.
If you looking at the information at this time and you don't have a position, the market profile bar or the line is below, and the as you said, the weekly point of profile, or it is extended to some extent. Would you consider getting short at this time, or would you get long? What position would you take at this point where it is trading right now?
Okay. Great question. All right. So I'm gonna do the first part by asking you, where are we relative to weekly, monthly, and yearly value? Just by looking at this. Can you see it?
It's on the high aspect. It's on the top of the monthly and weekly time period.
Yep. And I'm just gonna scroll
And also
here.
even on the daily time period too.
So I just wanted to show you that monthly Vpoc is all the way down here, right?
Okay. Mm-hmm.
Weekly's here. You see yearly.
Mm-hmm.
If I was a swing trader and I'm trying to, maybe even position trade, I don't know if we'll get there in a couple of days, but this here to me is the biggest magnet of them all, fundamentally. This is where the most volume in the last, year is traded. And that to me is sort of on the highest time frames of my destination. Am I gonna think about adjusting being short some days versus long some days? Of course. But right now, structurally speaking, what do we have? These are the local highs. These are the local lows in the last week, right? For this week's trading, with the information coming in, with the scheduled news, with Russia, with the oil, with all that, with Barclays and the VIX, the VXX, this is kind of the most relevant chunk of information this week. And so we came in this week, we did have a nice rally. We did find strong selling, strong enough to reject prices immediately. The overnight we tried to do something, nothing happened, right? So you see how it's darker here? So we traded in the dark first in the overnight, and then we sold off, right? How we sold off in the overnight was quite relevant because we were trading and distributing above Vpoc, right? And so you got to think about fairest price. If the most recent reference there was, this is the fairest price, why did we just kind of barrel through it like it meant nothing? That's an important clue. If you get to a Vpoc and, to size up how important it is, that's the discretionary part. So yes, it is an overnight session. This is just a day profile. But why would we, with the most recent information, this distribution, this value area, this Vpoc, why would we kind of just ignore it, right? That's a rejection. And so a common term is acceptance or rejection. Acceptance being we spend time, we spend volume in an area, right? Acceptance here initially in the overnight session above value of the previous day, right? This is the value. I don't know if you can see it, but that's the value high, that's the value low. So we kind of accepted prices above, and then we failed to, keep going. We found some strong selling. But then we rejected the most fairest price where we had the most two-way trade, right? And that's where big positions are likely to kind of get in and get out, right? And so that in of itself is a clue. And so by the end of the night, we're trading at the lows of the overnight session. Overnight inventory is 70, 30, 30% long, most of it's short. And what do we get? We get an opening. And remember I said single prints are important? I'll try and zoom in here just to make it more clear, because this kind of stuff, I know I'm just picking an example, but this happens all the friggin' time. Where do we have the most recent reference of selling? Right here. I could show it to you on the footprint, but I'm going to skip that part for now. So we open here on the next day. We come up. If we're going to get long in the open, which I don't usually trade the first 15 minutes, I kind of like to digest. But if you're watching this, like this here is screaming at me. My bias is short. Okay. I'm going to watch how price trades the first little bit, goes up and down. What is significant here? If you're watching the DOM and you're watching the footprint, which I would be for these price ranges specifically, everything else other than down here, like everything in between here, to me is not interesting, right? If we're going to break the overnight low, if we're going to break the previous day low, these are the 3 points that I'm interested in, right? So that just eliminates me paying attention to garbage, right? You know how it is on the open if you're a day trader. It's like, if you're looking for scalps, like it's very difficult, right? So we look for sellers here, we find them. So that's objective information. Like that is not my feelings, and we find them. I'm just going to expand this a little bit to sort of illustrate how the rest of the day traded. So once we found sellers, sorry, I think I lost it. Sorry, that was an overnight session. Sorry, that's another mistake that happens sometimes. Sometimes the overnight profiles, they don't actually erase themselves, but let's just keep that in mind that there were sellers at that level and we found them during the RTH. So we had continued selling. Okay, so let's say we have a bias short from the overnight. We find sellers where we would expect them. Now we're kind of more feeling the shorts. If we're gonna get short, where are we gonna look to short to? Right? We know like obviously the weekly profile a day ago like would have looked a slight bit different, but it's pretty much going to have looked the same. Like we know this area is where volume was traded in the weekly basis, and so that's where we found buyers. And the overnight session after this day isn't showing, but we basically distributed in this area, and then today we sort of departed and never came back. So that to me is a logical reversal as a day trader. Is we found sellers, they continued overnight, they continued in the RTH where we would expect them to initiate. Where would we expect them to go? At least we would pay attention to this level, the weekly Vpoc, and then we would analyze the price action, right? It might have continued lower. I'm not a wizard, I don't have a crystal ball, but I'm going to expect things and then pay attention where I expect. And then getting long here might have been a little more difficult because, okay, personally, I didn't take any trades till the afternoon. This was very confusing out the gate. But this blue line here, which I was going to talk about just before you asked your question, the initial balance, the first hour of trade, this is a huge deal for people who trade like me. So the initial balance tells us sort of where the market establishes value in the first hour, where most of the volume is traded. Right? Like the ES, it's like could be 50, 60, 70% of the day's volume in that first hour. It's super relevant. And so we have these things called initial balance breaks. And so sometimes you break below, which we didn't, and sometimes you break above. And a lot of my trades are structured around initial balance. These were some of the first strategies that I was taught, and we can get into that in a minute. But in the D period, the second hour of trade, we had an initial balance break. This is my trade, getting long on the initial balance break. After I've seen the sell-off, find buyers at weekly Vpoc, a buying tail after we were not able to go below this overnight low. So we found buyers where we would expect the larger players to enter. We had an hour and a half, 2 hours of information where we were one time framing up, which means, buyers are in control. We constantly kept making either higher highs, but not lower lows. And then we break this blue line, which I know it sounds very TA like Fibonacci retracement, but this stuff, if you look enough, is very relevant. So there's different things that happen. You'll see a bunch of stop runs and such. And so we get this break. Now I'm going to show you something as a tangent that I wasn't necessarily going to talk about, but you can map out extensions of the initial balance. So can you see this chart with the green, yellow, and red? Yep.
Yes.
Okay. Each of these green lines is a percentage extension of the initial balance range. The initial balance is this between these yellow lines. So this is a 10% range extension, 20, 30, 40, 50, 60%. You can assign statistical probabilities on initial balance breakouts. I have the dotted line at 30%. I will take that trade from the initial balance to the 30% because it's above 80% success. If I don't make that trade, if I lose that trade, I don't care because I will take that trade every single day. Guess what happens after we do our breakout? This also is a very common thing. So I left a lot on the table, right? Whatever, I don't care. The odds really taper off as you go into the 40, 50, 60%. It drops like well below 70, 60. And obviously those stats, they change day to day. So that's a whole other discussion. But to me, this is a really great, it's not a long, crazy trade. It's just a few points, but I'm going to take it every single time. Where did we pull back to? The initial balance high. And this type of setup happens like a lot. It's not every day, but it's just when days are kind of trending, there's some profit taking, these structural levels really matter. And so I did take this trade again and got in. Look where we found sellers again. I didn't actually write it out all the way, but this type of stuff where you're getting the initial balance break above or below, this can kind of help. And so I'm sort of departing away from the profile here, but I'm just trying to show you like how it can be useful to sort of get yourself ready for meaningful setups.
So it is the 30, 60, and 80% is from the initial balance period.
Let me go back. You mean these like these green lines?
Right.
Yeah.
So it's based upon the initial initial balance you were talking about, the first half hour.
So let's say the range today was double this. My range extension levels would scale with that.
Okay.
So it's on a relative basis, which is interesting, right? Because it means my trades are not defined like statically. Do you know what I'm saying?
Got it.
If it's a tight range day and we're going to break out, I might not necessarily expect a 10-point extension, right? If we open above value and we are expecting a larger amount of volatility and we are seeing a wide initial balance, and then we are going to expect a larger extension. Doesn't mean it's going to happen. I never know what's going to happen. I've accepted that as my truth. I never, ever know what's going to happen, but I'm still going to take trades based on what I know from a discretionary perspective with a little bit of stats. Does that make sense?
Yes.
All right. Any other questions? Or I don't know if you had another one. Oh, got a question from Joel. So would you place a buy order at the lower green line and or use other factors in this trade? Okay. Normally what I do, I don't necessarily take the trade on the first impulse up. Sometimes I'll take it just to catch the like 1-2 point stop run move, and like that this candlestick really illustrates that it was kind of like an immediate purge up and then came back, right? I like to see a pullback and then to see buyers really initiating again. And it's hard to describe what that looks like unless you've spent hundreds of hours looking at the DOM of the S&P 500 to know the numbers flying through, what that would look like. I meant, what did you say? I meant on the retracement to the green line. Sorry, just to make sure. Do you mean this here, Joel? Yes. Okay. So the yellow line is the initial balance. That's where I'm really trying to pay attention. I generally scale in trades. So I like to trade between like 3 and 5 units or clips. And so I would try to get as much as I can close to this. So I'll monitor the footprints to kind of see when market selling is starting to exhaust itself. And so when you get a feel for the numbers on the footprint in the DOM, you can kind of see like when they're getting tired, and you can see the the flow's like changing, right? And if you look at a candlestick, like it really changes really quick. But like these moments right here, if you spend enough time studying it enough, like it's quite obvious. And like these looking here at this point and this point, like I am probably spending 50% of my like mental capital like in hyper focus on the DOM. I've got nothing, I've got no other charts on my screen. I'm flipping into like drilling down into every single contract that's coming in for those moments in anticipation, right? And so if you look at other types of charts with different things like delta and Renkos with rotational components, it's a little easier to catch that, right? So I'll scale in, and generally speaking, I don't always like to leave my stop below like the midline because sometimes that risk is not well defined. But I can tell right away, and I know how JT last time on your webinar, you kind of explained like how you're willing to just get out of your trades like really fast. Like if it like you're just if it's really not working, like you're able to get out fast. I very much like that style. Like I might scale in like 3 clips, and I just really see seller like not exhaustion, even though it kind of looked like they were. Then they continue like I'm just gonna get out, right? But this is really where I'm going to focus around initial balance levels. They're my favorite levels. They've worked for me more consistently over the last 2-3 years, especially in the ES. I can't really speak to many other markets in that regard. So yeah, it just
And
becomes
that's strictly the first hour.
yeah. You could some people use like a 15-minute, 30-minute initial balance.
Yeah,
I
yeah.
Some people call it opening swing high, opening swing lows. They'll use it just on rotational. They'll use it on 5-minute, 15-minute. Like there's so many things, right? Like this is just how I was taught. This is kind of how it's defined in the books that I read, which I
Mhm.
can get into the resources in a bit that I would recommend. But yeah, this is a classic day. Like I can't explain to you enough. Like this type of the way this looks on my charts is so familiar to me. It happens so frequently.
Mhm.
Um, so I would encourage looking into initial balance if you're getting started on the journey of market profile. It's huge. I hope that answers your question.
Yeah, yeah. That's great.
Like I said, you never have a crystal ball. Like I'm not upset if I lose, if I win. It's all the same. If the stats are there, if the order flow's there, and my analysis has said, pay attention to that, expect this. If this happens, do that. If that happens, do that. You know what I mean? Like I'm willing to pay for a loss if it's going to give me information for a different kind of win. But if I'm placing my entries at the right places where the risk reward makes sense, even if I'm wrong, by leveraging these tools, like you can actually open up yourself up to a bigger trade. So it's kind of hard to explain unless you spend the time really paying attention to it. But you'll understand when like you'll have those moments. It'll just make sense. But it takes years. Like I can't stress enough. Like I've probably tried to teach a dozen people this stuff, and they just kind of all gave up because it literally takes years. Like I've read the books on this like over and over and over again. I've watched the videos over and over and over again. I replay the day session every single day. I replay it. So it goes into my brain. Like it's like anything else. You have to really develop like a subconscious level of intuition. And it's only done by putting in the energy, like really driving it and studying it. It's not a lackadaisical like it's war, man. Like people, like when you're trading, people are taking your money. Like you have to have a certain frame of mind. Like it's them or you, right? At the end of the day. And so what are you going to lean on to go to war? I like to use objective information where I get to remove as much emotion as possible. Now, the psychology thing, of course, I would say my execution probably isn't where I want it to be. I still want to make more money. I want to execute better. But you got to build the analysis first. You got to stand on your own ideas. And this really helps doing that. The only other thing I wanted to quickly scan is to show you guys, like when I'm doing higher time frame stuff, these are weekly volume profiles. Okay. And so they look a little different. Same information fundamentally, right? And so I want to be aware of the auction on a weekly on a weekly profile perspective. So like I'm going to look at this quite often at the beginning of the days, not necessarily throughout the days, but I'm always trying to do a top-down approach where I'm thinking about where's Vpoc on higher timeframes? Like where are we auctioning over multiple weeks? We're in an uptrend, right? Like we're not making new lows on the weekly. We're constantly pushing new highs. The Vpocs are on the upper ends of these distributions, right? Higher prices are bringing in higher volume. The more you study the types of profiles, like this is more of a trending profile. This is more of a balanced profile. And so to me, there's, keeping those levels, keeping those higher time frames always in your head, because the big boys are trading those time frames and we're always trying to be with them, not against them. So if you're, fading a trend day, that, anyone who's traded that day and failed, like I've done it, I've had my fair share of losses. It just, when you look at it in hindsight, you're like, oh my God, like why was I trying to do that? And so some things like this can kind of help get rid of those bad ideas, right? When you understand like broader trends. I'm not going to get into correlation, but just to mention, like I am looking at a lot of treasuries, a lot of indices at the same time, just to see if flows match, because sometimes they don't. And so my confidence level might be less. I might be willing to put in less risk. Let's say the treasuries are going bid and the ES is going bid. Well, there might still be a trade there, but it's going to be a little funky for me. I'm going to be a little tighter with my tolerance. I'm not going to be willing to just, hold on to a loser for a long period of time. And so I'll just quickly demonstrate what I call the macro screen here. On top are the four main indices. On the bottom are the treasuries and the Euro USD future. And so this is kind of my dashboard. I'll pay attention to this sometimes just to kind of see if, are all the indices kind of doing the same thing? Or is it just some like Apple earnings causing the NASDAQ to do some, weird stuff? Are the treasuries kind of doing the same thing? I've really enjoyed watching the indices on a DOM alongside of like the UB, so the Ultra Bond future, because that one is a sort of less liquid, more volatile treasury, and I find it kind of helps pay attention to like that correlation I was talking about. Are treasuries going bid? Are they going risk on, risk off? And just to kind of get a broader, confirmation, are my ideas in line with the rest of everything else, even though I'm really, really deeply paying attention to the S&P 500 futures, mostly in isolation. So you can, I don't know if it's too small for you guys to see, right? But every single one of these charts, like I can scan this and I can evaluate where are we in value, right? Relative to value on a weekly, daily, monthly, yearly for all of these markets. And this tells me risk on, risk off, basically. So this is kind of powerful. To me, it's not something I look at all day long though. Just looking at my bullet points here, I wanted to talk about timeframes, which I did. If you ever hear the word composite profiles just mean combining. And so cool things that you can do is you can kind of combine these profiles and it might help you understand the auction. So for example, I can merge with the next profile, and you can merge and merge and merge. And the reason you do that, and I hope you guys can see this, is I'm starting to build kind of like a balanced distribution. And so the concept I talked about earlier of balance to imbalance is very fundamental. And so you'll notice, right, sometimes we're trading like sideways, which the market profile guys will call it like a bracketing market or a balanced market. And so trading a balanced market, right, it's more of like mean reversion. So like if you're above value, you're kind of going to want to short in back in mean reversion. If you're below value, you're going to want to buy. But you also want to be conscious of if price starts to lead value, and that's kind of what's happening, right? We've done this 3-day distribution, and you can see based on the coloring, we distributed up here, we distributed lower, we distributed lower, and we found our buyers where we needed to. And then guess what? We literally came all the way back. So like this to me is a complete act of balancing, of distributing, and now we're kind of entering a potential phase of imbalance. And so in this case, because we're trending up, this is more of a, this was a pause, this was bracketing for a few days, this was balance. Now the larger time frame buyers are continuing to enter the market, and that's showing itself because we're making new highs in the overnight session. Personally, I'm not taking trades tonight. I'm going to see where we land tomorrow, if we're in value or still above value on a daily and weekly. And I think no coincidence here that we're finding buyers above weekly value right now. This is the nearest high volume node. So personally, I would think we're still like trending up, and the nearest high volume nodes are up here. We have this structure here, the structure here. And so I'm going to use these as targets. But as we look at this, thinking of balance to imbalance, I think is very key. Because if you're, aiming for large targets and taking a wide risk tolerance in a balanced market, it doesn't really make sense, right? Depending on your style of trading, even if you're a multi-day kind of swing trader, it still kind of applies. So if you're catching imbalance, it happens way less frequently, right? When things move, they move fast. Those are the hardest ones to catch, but once you start to develop a sense of balance and imbalance, it becomes a little easier to kind of spot when they're coming. And so I don't have a crystal ball. I don't know if we're going to sell off. I don't know if we're going to continue. But going back to your earlier question, Sri, I do feel like based on this distribution completing, overnight action, sustained acceptance, not a rejection, right? Acceptance above weekly value. So long as that holds, I think, longs to me would make more sense. If you're scalping for 4 ticks, I mean, that's a totally different story. But I hope that kind of makes sense as far as using composites to kind of find balance and imbalance and detect, is it bracketing? Should I be more aiming at mean reverting? If I'm going to take those mean reversion trades, you'll know how to have a tighter risk, right? And if you're wrong, you can get on the other side of the trade without having to pay too much, right? And so for me as a day trader, I think being able to immediately recognize I'm wrong, but that's fine. The bigger opportunities on the other side, I just paid the smallest amount that I could to take a certain trade. Let's say it was a mean reversion, shorting, going back to Vpoc, let's say, but I'm wrong, but maybe I'll only allow myself like 2, 3, 4 points of risk. And I'm really trying to get in at the edge of value, not in the middle of value. There's nothing there for me, right? But then I'm wrong. We start breaking or rallying above, right? Clearing out the initial balance and all this stuff. And I'm paying very little amount for that information. I can get on the other side quite quickly, right? That's just my style. That's kind of the way I've been taught. There's a million different ways to look at it, but that's just kind of, I think, how when you look at risk reward, I'm letting the market dictate it. I'm not just inventing. And I see a lot of this is like, oh, I'm just going to take a 1 to 10 risk reward trade. Like they're just going to, for no reason, say, here's a 1 point of risk for 10 points of profit. I'm just deciding that like arbitrarily. Like to me, that's not trading, right? I'm going to use structure. I'm going to use high volume nodes, low volume nodes. I'm going to use the footprints to tell, to know where the nearest references of buyers and seller imbalances exist. And that's going to allow me to try and, minimize the damage basically, right? And hopefully let the winners ride. I think JT, you trade, and I haven't watched you trade. Like I've only seen your one session, but I think that's kind of what I remember you sort of preaching, right? Is just managing it that way, where you're okay to just be wrong, but when you're right,
It just cut out there. Unless that was just for me. I don't know what just happened. All my audio just dropped.
Thank you, Wes.
Oh, you can hear me?
Yeah, I can hear you.
yes.
Okay, I don't know. For some reason, Wes dropped out there. Yeah, so it pretty much like I like to have a general idea of where I want to take profit. And like I said, I somewhere around 5, somewhere around 10, somewhere around 15, but it's based on the larger structures. So if there's an expectation that there could be potential resistance, 7 points for my entry, maybe I'll go for 6 points on it rather than 5 for that first profit target. But I'm generally not just going hard, like you said. I'm not just taking 5 points every time I place a trade. I'm taking profit at levels I expect to be trouble for the buyers or the sellers, if that makes sense. And I think Wes dropped out. He might have lost internet or something. So we might have to give it a second here. While Wes is getting back in here, I'm gonna try and see if I can bring up the Thinkorswim charts here to show Sri what TOS has here. So give me 1 second. I'm just loading up TOS right now. Should have had it open earlier. Okay, and let's see if I can share this screen here. Share screen. Okay, so you should be able to see this screen now.
Yes, we can
Yep.
See it? Okay. Yeah, so this is like a market profile here on TOS. So I can send you the script for it. And you have your value area high, your value area low, whoops, your point of control for the day. And then it'll build out that, that 3-dimensional or whatever, build out the profile for you. There's also another grid in here somewhere. Yeah, so you can also do this where you get, I believe each of these profiles are a day, and you can probably aggregate it. I don't really use this stuff. I might start looking at it a little bit more after Wes's presentation, but you can actually look at this like he's looking at it. Of course, probably not with the capabilities he has using Sierra chart, but you get the whole daily profile. You can see all the prints here, and then you have your point of controls. And again, this is not my thing. I just remember that I have all this stuff saved on TOS, as I used to. This is kind of when I started learning how to trade with Jason, and he shared these with me. So Sri, if you want these specific charts, I can send them over to you.
Yes, please.
And that way you can at least get started with it. So on this one, I'm just trying to remember, it's been a long time since I even looked at these two charts. So on the right-hand side, there's some type of aggregate. It might be like the weekly or the monthly. So you can set it up in similar ways. Did Wes get back in?
No, I don't think so.
Wes is having some internet difficulties. So let's see if this is Thursday. And what was, let's see, go back to charts. Yeah, flexible grid. So I've just been watching this for a few days, this chart right here, just to see if it helps me in any way. But anyway, yeah, I don't follow auction theory, so just wanted to share that with Shri, and I'll send over the links for the charts and see if I can.
I appreciate that.
For sure. So it says, let's see. Okay, looks like Lincoln took off. We're gonna get back to Wes. I think he's just gonna wrap everything up. He did get back in, so Wes.
Can you guys hear me?
Yeah. Go for it.
Man, I'm actually happy that happened because I have redundancy like in battery backups and backup internet, and this just proved that what I thought was solid actually isn't. So learning opportunity with no risk on. I'm super happy it actually happened now. So forgive me for the delays, but I'll clean this up and wrap this up here. So yeah, we were just talking about, I think, higher time frame perspectives, weekly profiles, composites, just checking through my notes here. Really the only thing I wanted to end with is sort of what I feel are the greatest resources to leverage. But before I do that, I just wanted to make sure, because I think there was a question just before I lagged out. I forget who asked. I just want to make sure everyone's on the same page.
What was the, sorry, what was the question?
I think it was something, someone asked me to look at some level.
Oh, well,
weekly.
You ended off, you were saying like, you were asking me if I agreed about like where you would take profit and how it wouldn't be a rigid number, but be based on things that you see in the market, I think. And my answer was basically, yeah, I do like general 5, general 10, general 15. That could move based on the whatever potential areas of supported resistance I'm pushing into. Mm-hmm. Right. So if I'm going for a general first target of 5 points on the ES, that's general because the average true range, all that stuff is going to change daily, right? And then the overall volatility and all that stuff is going to factor into what targets I'm actually going for. But I try to keep it around 5 and around 10. So it might be 6, it might be 7, it might be 4, and it might be 12, right? So it's not like it has to be exactly 5 or exactly 10.
Mm-hmm. I do know that one of the greatest pieces of advice someone gave me, and it's harder to implement it. Truly, I still struggle with this, but the best trader I know focuses on his exit, right? He's thinking about the exit versus where he's getting in. He prioritizes, how am I out successfully in this trade?
Mm-hmm, mm-hmm.
And I'm still, like, I'm telling you, like, it's not the first natural instinct for me anyways. So I am working on that. And I think that, in line with, like you said, paying attention to volatility. What are the average rotations? I think in ES, last I checked, it's like 10, 11 points, right?
Yeah, it's like wide.
Right now, I mean, flip to micros. If you're trading a full contract, give yourself a little more room because it's all noise within 10 points, right?
Mm-hmm.
That's a $500 range just on a contract on an ES mini, right? So
yeah,
like, for most people, probably that's not reasonable, right? Sometimes it goes down to like 4 or 5 points for the average rotation. So I do monitor that. I didn't really get into that. Yeah, totally. And so, yeah, as far as resources, okay. Jim, aka the Dalton, like the king of this, the godfather, my favorite person in the world, who I would really hope to shake hands with one day before he dies. He's an old guy at this point, great attitude. He wrote the books. He was the founder with Stottlemyre. He is the guy who kind of pioneered and pushed these concepts out. So a lot of people have sort of either added to it or written books on this or done content on it. Dalton is the starting point. And so the first book, which I don't recommend reading from start to finish because it's broken down into stages. It's kind of like read a bit, digest it, apply it to your markets. You go from beginner to advanced to expert. Um, Mind over markets. There's an updated edition or second edition, a more modern one. That is my Bible. If I had to take one book, that's the book, Mind Over Markets. And I can post this in the Discord after, but he does have a second book called Markets in Profile. I probably wouldn't even look at that unless you've done like a year or two. Honestly, it's more advanced. It's more about the nuanced discretionary parts. Um, it's a great book. I would say if you could read Mind Over Markets 3 times, I'd recommend that over, reading both of those books. He does have a website. He does have training. He's legit. He ran hedge funds. He did all kinds of real business. Like, it's not just a fake guru. It's literally the guys that pioneered this concept and with Steidelmeyer like decades ago. They're OGs in the game. This is the real deal as far as I'm concerned. Now, of course, how the markets in the S&P worked 30 years ago and even, 3 years ago, everything kind of changes, but it doesn't matter. And that's what's really beautiful is you can adjust with these concepts. What else did I write? If you've ever heard of Axia Futures, they have some pretty good content for free on YouTube relating to profiles, volume profiles, balances, and balances. They do kind of cater to the very short time frame, like scalping types. They're heavy on the DOM, heavy on the footprints, heavy scalpers. They're the real deal. They're a real firm. They bring on real traders. I'm actually debating myself taking their it's like 5,000 euros, I think, or maybe pounds, because it's in the UK. 6-week program probably cost me about 20 grand to actually fly over to London, UK for like 2 months to just hang out and do it live, but you can do it remote. So they have some real stuff, but you can buy it in chunks. They have, I think, a course on profile, and they're one of the best educators, but they are a real firm. And so, yeah, I'd possibly look into that. Dalton himself has a YouTube channel. He hasn't really updated anything in the last 4 years, but if you go and read or watch his webinars, there's so much value there, and it kind of just builds on top of what's in the book. And so it's like, you should probably read the book first. I know it's easier to watch videos. Personally, I find reading a physical copy of a book more important, more like information retention happens than reading the same book on my screen on my computer, and even more so than watching a video. So I like to say, get your face into the books, pay the money, even if you can find it maybe for free, pay the money. You'll get more value, right? And so that's really like the core of the resources to get started with this. Beyond that, I'm in the Discord. If you have any questions, like when I can, I'm pretty busy, but I'll try to get to them. I do like to help people who are genuinely interested in these topics, but I also have relatively low expectations because, like I said, in my experience, most people I've tried to introduce to this kind of just fall off and go back to whatever else they have going, because it does take a lot of commitment. It does take a lot of revision, a lot of studying, and some people just don't like really getting into that. They just want to kind of trade, right? And so just kind of have that expectation that, if you kind of want to study this, like, you pretty much have to be willing to like commit for years, and it gets better. It's like anything. It's like cigars. It's like good whiskey. The more you let it sit with you, the more value it's actually going to bring. I'm still constantly learning. I'm actually rereading the Dalton book for a third time now. The Mind Over Markets, at least. I've read the Markets in Profile just once, and it's literally just opening my eyes. The other thing I would suggest, I don't know how many of you are scalpers or day traders. I don't know how you journal, but I think journaling is one of the most powerful things you can do, because the more you tap into understanding yourself and your psychology and your mistakes, the faster you can get better. Personally, I recommend a tool called Notion, and I would highly recommend looking into something like that, or Evernote, to do your analysis if you're looking at things in the morning, to document your trades, to do your stats, to kind of do your post-market analysis. And so I think that component to me has been instrumental in just kind of continuing on, through the ups and downs, through the crazy wins and the crazy drawdowns and the occasional blow-ups and all the things that go with learning about trading, and more so about the journey of navigating your own psychology and the crazy lizard brain that comes in at those points where you don't want it to. Like, those things can't be ignored. So it's not just about studying the charts, but study yourself, and look at Notion. I pay $4 a month, gives me everything I need. It's probably the most impactful tool on business, life, and just trading, for and everything. Like I couldn't function without this tool. I literally use it for everything. And so with that being said, I thank you guys for the time today. It was a lot of fun. I got a lot of value just kind of running through this stuff. I'm sure we could talk about some other topics in the future. Yeah, so Notion there. You got it, Joel. So that's it for me. It's approaching 11 o'clock. My partner's in bed, so I think I got to shut her down. Any last quick questions before I head out?
To be honest, Wes, I was going to say it's getting late for you, so we should probably just wrap it up. So if anyone has questions, just send Wes some messages on Discord. I think that's the best way to go about it, because I also have some stuff I got to do before I head to bed. So,
all right.
So let me just wrap it up. I just want to thank everyone for being here. Thank Wes for that. I was really looking forward to this because auction theory and using volume profile has been on the sidelines for me, and I think this is kind of inspiring me to start actually seriously getting into it. So appreciate all that. Just a heads up that we do have our monthly general meeting next week. That is an in-person meeting in Las Vegas. We are not going to be broadcasting or streaming that like with a video. So, I apologize. It's just, I just don't think it's going to work. So if you can make it out to Vegas, we will have our meeting next week. If you're not a member on meetup.com, we do have the Las Vegas Day Traders, and that's where that monthly general meeting is posted. And don't know if there's really anything else for me to say here. One thing that I had put in my notes that I wanted to emphasize is the importance of mental capital that Wes mentioned. Just be aware of that when you're trading. I find that usually after about an hour or two of trading, that's about all I have. And then I need to kind of step away and come back, at a later time. So keep in mind that your psychological capital is probably one of the most important things. So I just wanted to emphasize that. And I think that's basically it. So until next month, have a great one. And hopefully I'll see some of you in person next week. So take care, everyone.
Thanks, guys. Can't wait to one day see y'all in Vegas. That'd be fun.
Hell yeah. Awesome. Take care.
Have a good night, guys.
Bye everyone.